Take the discussion on markets forward with a special guest who is joining us. He usually joins us from New York and Chicago of the world. But today he's in our own neighborhood right here in Pune. Santosh Rao of Manhattan Ventures is here and enjoying the misal pav in Pune. Are you, Santosh? Have you so far?
Absolutely. Really enjoying every bit of it. Love the weather. It's freezing out there where I come from. So this is great. I
Excellent.
love it.
Nice to see you. You're looking
Yeah.
nice and happy. Good. Great smile
Yeah.
out there. Santosh,
Yeah.
the markets are also smiling at us, be it from your, back home in the US. We've got a fantastic rally in the 2023, bit of a breather. Were you expecting this change in stance from the Fed, which would trigger such a big move in markets as well as rally in the yields and dollar index come down and kind of entire narrative that there could be rate cuts by mid of this year? Santosh, can you hear me? I wanted to, ask you whether you surprised the way entire narrative globally has got changed. We are talking about rate cuts this year.
Yes. I missed a little bit of it in the middle, but I think I caught the gist of your question. Um, I think the lot depends. Two or three things that are going to determine really the U.S. market. Of course, the disparity between what the market is expecting and what the Fed, I think, will do. I think originally there were 5 or 6 cuts were priced into the market, and that was the enthusiasm coming into the year. But I think now, after all the Fed governors have come out and said it clearly, and also seeing the CPI data, the last CPI data that came out, I think the Fed is not going to do 5 or 6 cuts. It's probably going to do two, maybe at best three, if inflation really comes down fast. So I think that's the scenario. I think the market is adjusting to that. Overall, I think that's going to be a key determinant. If the market can figure out where the Fed is leaning, we will get to it. But there is no way they're going to start cutting now, as some of them expected. It's going to be, if the first one will probably come in June and later on. That said, there's some other issues going on. The earnings reports are coming out. The bank earnings were really bad. Very pessimistic outlook. So I think that's not good as well. So things are slowing down on one end, where the Fed might say, okay, we need to slam the brakes a little bit, cut the rates. But on the other hand, inflation still is high. It's sticky. So that they don't want to get ahead of that. So I think that a lot of cross currents at this point. So we will get a better picture maybe in another 2 or 3 weeks when the earnings come out and we see the outlooks for the year from the US companies.
As we speak, we also see the BOFA Fund Manager Survey, which is out. And very interesting commentary coming in there. 55% of the investors are saying the long-term bond yields will actually head lower in the next 12 months in US. If it does happen, what would it do to funds flowing into emerging markets? Can India expect more money inflows coming in from FIIs?
Absolutely. If the rates keep coming, if the yields come down, I think that's definitely the funds will start flowing there. And that's a big thing. I think India, of course, is a magnet for the emerging markets. It's a bright star in that whole ecosystem there. In terms of emerging markets, they're doing very well. They're coming into this year of course, everything is inflated. Even the valuations are inflated in the US. So there might be slight correction. But coming into the election year, which is another big factor, a lot of elections going on in important countries, even US as well. So that dynamics is going to play into the market as well. But net, I think the fund flow will improve, will get stronger in India for fundamental reasons. I mean, India is growing at at the fastest clip, I would say, worldwide. So money is flowing in. There's a lot of infrastructure investment, a lot of companies coming into into India to build stuff. So all that thing is flowing into it. Great government. The Modi government has really projected a sense of stability and growth, which is great for investors, and that's what they want to see. So all those things are playing into. So there are fundamental factors, good execution on the part of India. So fund flows and the interest rate and all the technical factors are also going to help as funds flow into India more and more.
Santosh, there's also a view coming in that Chinese economy will slow down further from here on. And we have seen record outflows from China. Some have come to India, some going to other emerging markets. Do you think this trend also gather pace? Money moving out of China, moving to other smarter, stronger economies?
Absolutely. I think that's a big thing playing out in the markets. China slowing down has been a real, I wouldn't say a surprise, it was expected. They have a lot of issues going on there. They have debt issues, demographic issues, and all the other things playing out. So the emerging market ex China is doing very well. It's growing at a fast clip. China is slowing down, is expected to slow down further, and that helps other countries, Vietnam, India, and all the other countries that can benefit from the outflow there. And for other reasons as well, I think the world has realized that being China centric is not really good. It's not a good practice, not a good strategy. So they're diversifying out of China. Even if China was not slowing down, I think just the geopolitical tensions and all that, people have realized that China is not the place to really rely on in the long run. So I think India is going to be a biggest beneficiary of that coming out. Funds are going to flow out of there. Investments are going to flow out of China. And definitely, that's a huge thing, and that's playing out in the markets.
Last word on India, since you are touring India right now, what are your friends, other fund managers saying, and what are your thoughts on the market? There's a scorching rally out here, record levels.
Yes, I think even when I talk to relatives and everybody is so bullish on the market, we've reached the top. Like every Tom, Dick, and Harry is talking about. We used to say that in the US as well. So I think that's a big thing here, and that's not necessarily good. So there is generally will be, and it's going to be a healthy correction. There needs to be one, maybe at least 5 or 6% down, and get more in sync with the reality. You know how the markets function. When they go up more, they overshoot. When they come down, they go much deeper than they should. So I think that's going to happen. So there's going to be a period of adjustment. There's going to be some euphoria if the elections are in line with expectations, where the BJP government wins the elections and kind of continues on the path that they're on. So I think that will continue. So that is definitely there. The smart money is probably waiting for the right entry point because they know that things are inflated. But overall, the general trend is right and up. And India is going to see that more and more. Regular corrections is part of the game. It's healthy, and hopefully there is one. And then overall, I think it'll come back to generally trending up, and that's the expectation, and that I think will follow through.
Santosh, thank you very much for joining us. I would have really loved to invite you in our studios here in Mumbai. But anyways,
Yes.
have a great trip in your
Yes.
motherland, and we'll speak soon again.
Yes, thank you. Thanks for having me. Great seeing you.
Right, so that was Santosh Rao. You may have seen him very often on the channel, early morning at 8, joining from US. But right now, of course, he's back home.